Hey, welcome everybody. This is training for Profit Flow Analytics. Profit Flow Analytics, if you are brand new to hearing about this, is an offering that was created by New Cycle Trading and Analytics. And Options Moneymaker has been working very closely with New Cycle Trading and Analytics to create some very simple, profitable signals for both futures and options traders. This is all about technical market trend analytics. So welcome. In this session, we're going to be talking about the new indicator that is being added to the Profit Flow Analytics chart, and it is called the trend bias. The trend bias training that we're going to be going through in this session is a continuation of the Profit Flow Analytics training in session 1, which was the foundation of Profit Flow Analytics. Session 2, which was all about the cycle finder, and then this will comprise session 3 of the training series. Now, trend bias is an indicator that has been added to the Profit Flow Analytics set of indicators, and the trend bias adds for us another method of identifying entry signals, and I'm going to explain that to you very clearly in this session. It also allows us to see the alignment across indicators more clearly, and it also allows us to recognize what the directional bias of the market is. So the trend bias has been created by New Cycle Trading specifically for the purpose of actually taking the tools that we already have in the indicators and making it even easier for us to identify good, strong entries. Now, the time frames that we use the trend bias on and Profit Flow Analytics in general are generally anywhere from 1 minute to a daily chart. And that kind of depends on whether you're an options trader, a futures trader, whether you like the rapid fire action of a 1 minute chart, or if you prefer to slow things down a little bit with a 30-minute chart. But I'm going to explain more in detail about what exactly this means. But basically, if you're using a 1 minute, 3 minute, 5 minute, or 10-minute chart, anything in that range, we're going to use a combination of trend bias indicators with one of the indicators set at fast and one set at medium. So just kind of hold that thought in your head for right now, and I'm going to show you exactly what that looks like when we jump to the chart. If we're using a longer time frame chart, a 30-minute chart, maybe a 60-minute chart, maybe a daily chart, we're going to be using a medium slow combination of the trend bias indicator. Regardless of what time frame you're using, the trend bias indicator combined with the other indicators that make up Profit Flow Analytics is excellent for futures trading, options trading, or even stock trading. So I have the general guidelines here on a couple of slides. I want to put these out there so if you come back and you listen to this recording, you can see this, but most of the teaching that's going to be done in the session is going to be in front of a chart. That's where you're going to learn. So just bear with me as I just give you a couple of basic parameters here, and then I'll make it really clear for you when we jump to the chart. When you're entering a new position, the trend bias indicator has 3 lines to it. It basically consists of 3 individual trend bias factors. There's a blue line, which is referred to as a fast signal. There's a red line, which is a medium signal, and there's a green line, which is a slow signal. A trend shift occurs when the fast signal crosses over either the medium and or slow signal. It doesn't have to cross over both, but it must cross one or the other. So this fast signal is our key. That's what we're paying attention to. We want to see that signal cross over the medium and or the slow signal. The other thing about trend bias and the way we have incorporated it into the profit flow analytics chart is we use two trend bias indicators. One of those trend bias indicators is set at fast and the other is set at medium if we are trading shorter time periods. Longer time frames, the trend bias is going to be set at medium and slow. So that allows us to tailor our trading and the trend bias indications to the time frame that we want to trade and to whether or not we're trading stock options, whether or not we're trading futures, or whether we're trading stocks. So the addition of the trend bias provides a wide range of highly profitable opportunities, and you're going to see that as we go through the chart. New Cycle Trading and Analytics has also made the decision. Now, we've been working very, very closely together on this. So in several discussions we had, the final decision by New Cycle Trading and Analytics was also to add back the Awesome Oscillator to the chart in order to complement and complete the entry consensus equation. Now, some of you who have been with New Cycle Trading since the beginning, since we first introduced the Profit Flow Analytics to the Options Moneymaker community, you know that the Awesome Oscillator is a factor in the other indicators. Not all of them, but it is one of many factors that are behind the scenes. But as we evaluated the integrity of the signals, we found that it was very important for us to add the Awesome Oscillator back in, and you're going to see exactly why that is here in just a few minutes. So the combination of the trend bias, which shows twice on our chart, the cycle finder, the profit flow oscillator, the trend consensus, and the Awesome Oscillator, this combination of factors actually offers a very simple yet powerful market analytics tool that any trader can work with and be successful with. So this is the last slide that I want to share with you. And again, I want this out there so that if you just wanted to replay the recording and you just wanted to refer here to these entry methods that I'm going to be teaching in this session, you'll be able to pull up this slide and see it pretty easily. So in this session, you're going to learn what we refer to as entry method A. And the definition of entry method A is when both of your trend bias indicators, fast and medium on shorter time frames for futures, and medium and slow for longer time frames for options traders or stock traders, both of your trend bias indicators have crossed, and that cross aligns with the direction of the AO, the Awesome Oscillator. That is a signal to enter a new position. So if both of the trend bias indicators have crossed down and the AO is red, you would go short on a futures or buy a put as an option. Entry method B is triggered off of the profit flow oscillator. But what we want in order for that to be a valid entry is we want a cycle finder to have printed prior to the profit flow oscillator printing, and that there is no reversal or conflict that prints in between the print of the cycle finder and the print of the oscillator. So when you have a cycle finder that prints red, and then 2 or 3 bars later, however many it is, there's no specific guideline on how long that has to take. So, but if you have a few bars later, a red profit flow oscillator, that qualifies as an entry as long as it also aligns with the AO. It does not, in this case, have to align with the trend bias. If you wait for it to align with the trend bias, you're just giving it more validity. You may miss a little bit of the movement, but you're giving it more strength. But the definition of a method B entry is cycle finder prints followed by the profit flow oscillator, and the AO is in alignment with that. A method C entry is what we refer to as a confirmed profit flow oscillator. Now this is a situation where profit flow oscillator may come on red, but you did not have a preceding cycle finder, red cycle finder. So in this case, you don't have anything that's telling you ahead of time that the oscillator may be coming on. So what you do in a method C entry is you wait for the profit flow oscillator to fully print. Whereas in method B, we can go as soon as that bar comes on red because we had a cycle finder ahead of it. In this case, with no cycle finder ahead of it, we're going to wait for that bar, profit flow oscillator bar, to fully print. And as long as the next bar also comes on the same color and that aligns with the AO, that's a valid method C entry. And then the last one we're going to be talking about in this session is what we refer to as the supercycle. Now you won't get very many supercycle entries. The most common is your A, entry method A, and you can filter that, and do just the A entries, or you can do A, B, and C entries. But a supercycle entry is when you've got a full confirmation of signals. And the power of that supercycle can be pretty compelling because it's basically telling you everything that we look at is lined up and ready to move in that direction. Now, again, there's no guarantee that that's going to happen, but the supercycle trades can be pretty phenomenal on futures trading as well as options trading. A supercycle is identified as a trend bias. So you've got both of your trend bias indicators having crossed. The profit flow oscillator has to be aligned in the same direction. The trend consensus has to be aligned also in the same direction with a dark color print. So if trend bias is crossed down and profit flow oscillator is red, you have to have a dark red on the trend consensus. And then all of that has to agree with the AO. So what we've done with New Cycle Trading and Analytics is created a very finite set of rules that I believe any trader can easily follow. And you can involve yourself in your trading as extensively as you want to. You could take every single signal that presents itself, or like I said earlier, you could choose a method A entry and only take method A entries. And you might get, 2 of those or 3 or 5 today. For example, there were 5 between 9:30 and 12 o'clock just for the method A entries. So super cycle is the other extreme where you're going to have far fewer of those, but generally when you do have them, those are the signals that are tending to pick up the broader moves, the bigger moves, and they tend to keep you out of some of that very frustrating sideways, stagnant movement that just really isn't moving anywhere. So let's jump to the chart. All right, so let's start with our trend bias. And there are a couple of things that we're going to do here, and in just a minute I'm going to have Erin jump in here and she's going to explain something also. Here we have one trend bias indicator, and that's set at fast. And we have our second trend bias indicator, and that is set at medium. And the reason I have fast and medium is because I'm showing you a 3-minute chart. Now, just before we move too much further ahead here, I want to talk about time frames. you know, I could put 50 of us in a room and we'd have a very fun and healthy debate over which time frames we should be trading. I know a lot of traders who like to trade the 30 minutes, some trade the 15 minute. A lot of traders, tons of traders I know trade the 1 minute. 5 minute has kind of been a staple for options moneymaker in the live trading room. Through all of the validation and testing that we've done on the entry method signals A, B, and C, the super cycle, maybe favoring just a method A or something like that, we found that the optimum time period, the optimum, it doesn't mean that it's necessarily always better than all the others, but it's an optimum time period. It means that we get great production out of it, and the other time frames may have some days that are slightly higher or slightly lower, but it's consistent. That's the 3-minute chart. So I'm showing you a 3-minute chart. When we show the updated profit flow analytics chart with the trend bias indicators in the live trading room, we're going to be showing the 3-minute chart. If you have questions about another time period, you can feel free to ask, but we're going to be primarily focused on the 3-minute, and it's just simply because it's proven to us to be a very consistent and optimum time period. So what you see here is a fast and a medium indicator. We had a couple of questions from people when we said that the indicators were available, thought that we'd made a mistake in the instructions, saying that we told them to load it twice. Yes, you want to load it twice. If you're using a shorter time period, anything less than 30 minutes, you should use fast medium. If you're using something with a longer time period, here's a 30-minute chart, we would be using a medium and slow time period. And just in terms of organization, we prefer that our shorter time period is stacked above the longer time period. So we're back to our 3-minute chart. Each trend bias indicator consists of 3 lines. You see a blue line, you see a red line, and you see a green line. The blue line is the one that we are focused on. That is the line that we want to pay attention to, and we want to know whether or not that blue line has crossed either one of the other two or both of the other two trend lines. When we say that it's trend bias qualified, we mean that there has been a cross, the blue line has crossed on both indicators, both the fast and the medium, or the medium slow on a longer time period. So, for example, here is an example where we're crossed. Now, let me just get there. We're crossed on one but not the other. So we want to pay attention to the fact that both are crossed. So in order for it to be a qualified A entry, for example, both have to be crossed. That's the strongest indication of a possible shift in the trend. This is really easy to read too during the day. It's not like you have to, squint and try to zoom in and see, well, I can't really tell if it's crossed, and I'm kind of guessing it kind of looks like it's crossed. There are 2 ways you're going to know. We want to be data driven. We don't want to be guessing at whether or not it's crossed just based on a visual. One is the data window has stacked fast, medium, slow for each our fast and medium indicator, and you're going to be able to see at the top of each bar, at the top of each 3-minute bar, meaning as the clock rolls over and we start printing a new 3-minute bar, you're going to be able to see whether or not the fast signal is above or below the medium and or slow. And then we make it even easier than that, because you set your labels, and you can see here that they're printing based on the value of each of the trend lines on each indicator. And I'm not looking at the numbers here. I'm just simply watching where the blue is. So right now, we are in real-time market hours here after regular session. Blue is below the other 2 trend lines on both the fast and the medium indicator. And that's all I have to see. All of our decisions are based on the beginning of a new 3-minute bar. So if you're wondering, well, what do you do if you have a mid-bar print? You don't do anything. You wait until the next bar starts to print. And we've just made that a hard and fast rule for ourselves because it's not the long, excruciating waiting period of a 5-minute chart, and it's not the rapid fire back and forth that you can sometimes experience on a 1-minute chart. So Aaron came up with a really great idea, and you're going to see this in the live trading room, and we want to share it here in this session so those of you who may not be in the live trading room can choose to use this approach if you want to. But it's so important to take action at the top of a 3-minute print when a 3-minute bar starts printing. And you've got this to look at, this to look at, and the AO to look at. And then we'll get into the other methods. But just using a method A, you've got those 3 things to look at. So we want to narrow that down as tightly as possible and give ourselves an opportunity to just do one quick spot visual. And what we're going to show you here, what Erin's going to come on and explain to you how to adjust, is one of the reasons why I think she gets such great fills with minimal slippage. She gets better fills with less slippage than I get, and I think one of the reasons is because what we're going to show you here. So Erin?
Hello, Mark. Hello, everyone. So when we got the pre-release, the first thing I noticed is I wanted to make the AO much closer to the medium and the fast trend bias indicators. And I've had TradingView for quite some time. So what I did is I moved it up, as Mark is doing right now, the AO until it was right below that medium trend bias indicator, because I knew I wanted to combine them together. And so then what I did is ended up combining them together. There's a few ways you can do this. You can right click on any of the AO bars. It has to be on the bar. And you go down to the move to and then choose existing pane above. Now what this is going to do is it is going to combine both the AO and the medium trend bias together. And you can still expand everything out. You still have all of your trend bias where they are currently trading on the right scale, the right-hand scale. On the left-hand scale, you do have the AO showing up over there. You can see it's a negative 1.44, and it's green. Most of the time, you won't really need that. There are a few times where the AO is very small, but most of the time, I am looking just directly where Mark's crosshairs were. And I actually have my chart shifted all the way to the right so that they're as close to the right scale as possible. So all at one time, I can see where's the blue line. Right now it's very obvious. It's below each of the other 2 lines. And then what is the AO doing? And it's green. And then that allows me to jump into a trade as soon as I have an entry.
And it's super easy to see this way. This, I thought, was a really outstanding idea that Aaron had to just combine it. And New Cycle Trading has adopted this also. But I can so easily see now, well, both of my trend bias are pointing lower because the blue bar is at the bottom, but I can simply see without having to scan down. Now, it sounds like a small thing, but when you're trying to get as close of a fill to the open of the bar as possible, that one extra half of a second or second can make a difference. And you can see that the AO is green. So there's no alignment between those 2. Anything else on that, Aaron?
I don't think so. I really enjoy how easy it is to be laser focused on that when your countdown clock is getting down, and especially when you see something setting up. If the lines are crossed but the AO hasn't changed yet in your favor, then you're ready to go then as soon as the next bar prints, if it prints an entry.
All right, so let's start at the top here. Method A. method A of entry is there's alignment between your fast, and I'm going to stay on the 3-minute chart here for now, but your alignment for method A is between your fast trend bias, your medium trend bias, and the AO. So what you would be doing is you're watching your countdown clock. Right now, we're in real market hours here. We've got now 20 seconds. And what we want to see is whether or not the next bar opens red. The next AO bar opens red. And why would we want a red? Is because we already know that both of our trend bias are pointed lower. So we're going to see here in 2 seconds what happens, and there's a red. There's an entry right there. It's a red AO, and like Aaron said, you can barely see that. It's just so flat and so tight, but I know that it's red over here, and you can easily just see that in your peripheral vision. So that's a method A entry. It is the alignment of both trend bias and the AO. It is so simple to spot, and it can be extremely profitable. Now, what I want to do is I want to make sure you're clear on each of the entry methods, and then I'm going to go back and show you some examples, kind of rolling through some trades and some activity in the market, and help you understand how this all flows together. Entry method B is when you have a profit flow oscillator print, and prior to that, there was a cycle finder that was aligned with your oscillator. So in this case, we had a red cycle finder. Then we had 1, 2, 3, 4 bars, and on the 5th bar later, it seems like a long time to wait, but we're going to be very patient as we wait for the right signals. Here's our entry right here. It also has to align with the AO. So cycle finder printed, oscillator agrees, the AO agrees. That is a valid entry right there to go short. That is a method B entry. If the cycle finder prints and there ends up being a blue oscillator or maybe a blue cycle finder before the red oscillator prints, it's not a valid entry. Any interruption between the time that the cycle finder prints and the oscillator prints invalidates that oscillator as a valid signal. Method C is when we have the oscillator print without having a prior cycle finder. So here's a great example right here. Right here, the oscillator printed blue, but you have no prior cycle finder. You have one back here, but we had quite a bit of red between that cycle finder and the blue print of the oscillator. So when we have oscillator print with no prior cycle finder, we're going to wait 3 minutes for that oscillator bar to fully print, and as long as the next bar also opens blue, then that's your entry. So basically you want 2 blue or 2 red on the oscillator to confirm the entry if you had no prior cycle finder. So that's method C. And of course, that also has to align with the AO. So the second blue bar, I look up here, I've got a green AO, has to align, and we can see that we got some nice movement to the upside on that. The last entry that we're talking about in this session is what we refer to as the supercycle. A supercycle is where you have both of your trend biases crossed, and you also have a profit flow oscillator that aligns, and you also have trend consensus which aligns, and it all aligns with the AO. Now, the super cycle can be some of the most profitable trades, but it's generally going to get you into the cycle later than some of the other methods will. And that's why I think it's important, if you decide, if you choose to trade all the methods, it's important to understand how to recognize the flow. You may be in on a method A entry, and then you're out for a profit. The trend is still moving in that direction, and then you're in on a method B or a method C entry. And then a super cycle presents itself, and you're in a third time, perhaps on a super cycle. So there are multiple ways. We used to refer to that type of pattern as continuation trades, but we wanted to put some more specific guidelines and criteria and rules around what used to be referred to as continuation trades. So we're going to put all this together. You should be using this in conjunction with your daily trading plan so you know exactly what your goal is. Like I said, you can use one of the entry methods or all of the entry methods to achieve your goal, but it's really important that you know what your goal is. If you are just open-ended and you're just going to take whatever comes to you for the day, then you don't really know whether or not you're actually meeting your goal. So this is a powerful set of signals. So let me kind of walk through. I'll use today as an example. Today had some nice activity to it, and then I'll just randomly pick a couple of days. So we're going to go back to 9:30 this morning. Let me let's reset that here. Go back to 9:30 this morning, and what we can see here right out of the gate at 9:30 is that we had an alignment between the AO, the fast, and the medium indicators. But here's the thing that we've also refined. At 9:30, we can see that we have that alignment, but we can also back up in time and see that that alignment actually was created at 9:24. So at 9:24, we can see that we could have gone long on a futures contract. Typically, what we are doing these days is we are waiting for the first full cycle that begins after 9:30. Now, if you want to trade earlier than 9:30, there's absolutely nothing wrong with that. The methods and the entry rules still apply. They're still the same. But when we are hosting a live trading room, we are looking for new cycles that are beginning after 9:30. So that's not a trade that we would typically take. We're going to wait for the one that develops and shows itself after 9:30. So let's see, let's go through this here. After 9:30, I got to get to 9:30 here and then move forward. Now, at 9:30, nope, sorry. Here we go. We'll go forward. At 10 o'clock, we have a super cycle set up. 10 o'clock is a super cycle. And why is it a super cycle? Because both trend bias indicators are crossed to the upside. AO is green, oscillator is blue, and you only need one. Sorry, I need to clarify something here. On a super cycle setup, you do not need a prior cycle finder. If it's a super cycle, it means you've got a bunch of other indicators aligning, so you don't need a prior cycle finder like you do in a method C. So here's a super cycle. Both trend indicators, the AO are aligned, the oscillator is aligned, and the trend consensus is aligned. So there's a super cycle trade that happened today at 10 o'clock. VAR opened at 83.32 1/4, and it ended up going up to 38 3/4. And if you are not out with a trailing stop trigger, or if you didn't lock in profit, your exit your absolute final time to exit would be when the AO reverses. So if you decide to stay in a trade because the trend bias is moving higher, or maybe it didn't hit your trailing stop trigger, you're going to take yourself out of the trade when the AO reverses. So in that case, I just want to evaluate this here. 10 o'clock. You didn't make money, you didn't lose money if you didn't lock in earlier. You're in at 32 and a quarter, and you're actually out at 32.50. So maybe a little slippage in there, but basically it didn't end up being one of your better trades. So then at 10:18, you actually have a method C entry. There's no prior cycle finder. There is back here, but you had a blue bar on the oscillator print between that and the red oscillator. So you would wait for the second red oscillator bar, and 10:18 is your entry, and it does align with the AO. Method C does not need to align with the trend bias. And in this case, in method C, you have a trade where you're in at 83.30, ends up going down to 83.22. So you have a nice opportunity for some profit there. But if you were not out of the trade, you would be out of the trade on your green AO. So the sequence, as you look at your charts, is going to show you a variety of entry methods. It's going to show you, here's an entry that is a B entry. Here's another B entry right here to go short. This B entry didn't work out as nicely as we wanted it to, but then you're right back in on this B entry and you get all of this movement to the downside. So please don't be confused. The introduction of the trend bias and this set of method A, B, and C and supercycle rules is not going to guarantee that every trade's going to win. But what it does in our experience is, that if you get into a trade that's not working out, you're either going to be taken out of that trade for a reasonably small stop, and I'm talking about futures trading here, or the AO is going to reverse and you're going to take yourself out of that trade. And then you're going to have generally an opportunity to either get back into a trade in the opposite direction or a re-entry into the same direction, and you're going to pick up these types of runs. Now today was unusual that we had this fairly major sell-off. I mean, you get those periodically, but it's not the norm every day. But when we did see that happen, I was not trading at the time that this happened, but I like to go back and see, well, where was our entry? And in this case, we would have been in on an A entry. An A entry is both trend biases are crossed down right here, and the AO is red. That was a very simple A entry. That A entry got you in before the fall off started. It got you in at 83.26 and a quarter, and depending on where you want to exit, it ended up going down to a low of 82.31. Is that right? Yeah, 26. So geez, almost 100 points down on that one. But it was the A entry that got you into that. Even if you waited for the C entry is the double oscillator with no prior cycle finder. The C entry got you into that trade at 83.13, 3/4. Still like 80 points to the downside. So that's your A, B, and C entries and the super cycle.
Mark, can I jump in here real quick?
Absolutely, thank you.
So the other benefit of this, if you go back to yesterday morning at market open, is that...
You said yesterday? I'm sorry.
Yes, yesterday morning at market open. I believe it was that day, right?
Mm-hmm.
Is a lot of the time the movement happens right at market open, but there can sometimes be that whipsaw effect where it looks like it's going to go one direction and then it immediately reverses. So I know a lot of times traders are apprehensive about getting in on the 930 bar due to slippage, even trying to fill an options trade at 930. It can be a little bit tricky. So while the 930 was an entry, you can see that it's a C entry. We have two oscillators there, and the also the trend bias are completely crossed down. There's red AO as well. If you waited until the super cycle entry, which is at 942, you still benefited from a good portion of that move lower. You went from 52 down to, what was that low?
30.
30. So a 22-point move. And that's not getting right in at 930, not subjecting yourself to slippage, just waiting until you had a signal to go in there and still end up taking advantage of that move. Although for those of you that do like to enter at the 930 bar, I know there are plenty of you out there, there was a signal right there at 930 as well.
Mark, I got one I think that would cause some confusion if you want to look at the Russell for a moment. It could, if you've got a moment. And it's actually RTY. It's across the top of the keyboard. It's in order for you, R, T, and Y. If you want to do that, it was easier. Might be easier for you.
Okay.
It's
well,
2 o'clock today.
Okay.
2 o'clock today. That's 1400 Eastern. So it looks like to me, so go back to that first blue oscillator right there. So technically that would be a C entry, right?
On the second oscillator, it would
On
be
the second, yes, yeah,
Yep.
okay, all right. But if you were waiting on the trend bias, method A, it's okay to wait until you have the cross, because that might get confusing. Well, we got all them blue AOs in a row, the flow oscillator in a row, and so that might cause some confusion. What should I go or shouldn't I go? But you had the trend consensus, but you had the cross. You actually had the cross, and it worked out pretty good. If you would have taken the first one we just talked about, which would be the C method, by my guidelines on using the stop on the Russell, would have been stopped out on that one, because it moved more than 3 points down, then it reversed back up. So
but I think that's a great example, Michael, because you are stopped out on that one. But
yes.
Then you actually have technically an A method entry.
Yes, sir.
Presents itself. That A method entry also happens to coincide with a super cycle.
Yes, sir.
And on the Russell, it's $50 a point, right?
Yeah, that's almost about 8 points, I think is what it was, Mark. I believe you can verify that. But I think
Ran from 1586.40.
Yep.
All the way up to, we wouldn't be in after this red AO.
Yeah,
trend.
1445. So yeah.
1594.50.
Yeah, there you go.
Right.
Nice move.
That's a really nice move. And so one of the things that we're trying to point out here, folks, is you don't have to take every single signal that presents itself. It is wise for you to understand the A method, the B method, the C method. It's wise for you to understand the super cycle. Because I'll tell you that the trades that really get me excited are when it just seems like everything's lined up. And I want to get into that. It also doesn't guarantee that trade's going to work out. But like Michael just demonstrated here's a beautiful trade. It's a perfect textbook C method entry, and you got stopped out. And then you're patient, and you wait, and a few bars later, you have a technical A method entry, but you also have a super cycle. And look at that thing go. That far outweighs the stop loss that you had out there.
Yes, absolutely.
So you've got A, you've got B, you've got C, you've got super cycle. So in, I think it's Aaron, I'll speak for you just a little bit. Aaron really enjoys trading the A method, where she's really just waiting for the trend bias to align with the AO. And it's really nice, and she recognizes that it also happens to coincide with a B entry or C entry or super cycle. But that is all by itself a very, very uh, consistent method. And that method, the A method all by itself is averaging just over 20 points a day. And you're generally going to have maybe 4 or 5 trades. Again, you can trade more than that. And there are people I know that are passionate about trading the oscillator and trading the B or the C method, whether you're waiting for one oscillator to come on or waiting for that to fully print and the second oscillator to come on. And then there will be combinations of those. We require that with a B method that aligns with the AO, but I know some traders who have taken a early preview of this, and they're going to wait, no matter what the oscillator is doing, they're going to wait for the trend bias to agree. So there are different ways you can slice this, but what we've tried to do in working with New Cycle Trading is to make it just as easy as possible. Brand new to this, what I would strongly advise is that you pick one, and I would suggest, as you're starting out, the A method. Pick one and trade that on a sim platform and get really comfortable, get really confident in it. If you're very comfortable with the Cycle Finder and you've been taking Cycle Finder trades, you know that the Cycle Finder is the way to find as close to the top or bottom of a cycle as possible. But by waiting for the profit flow oscillator to print, you're getting greater confirmation. That is also by itself a very powerful setup. The Cycle Finder, then the profit flow oscillator, and as long as the entry bar agrees with the AO, you're good to go. Those are the first 2 places I would tell you to start. But be conscious of the super cycles. Be conscious of the method C so that you can recognize them as they're flowing through the chart. Where you're going to, let's just say you're an A method only trader. You've decided to do that. And you get into this long run where it just keeps running lower, 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 walking along the lower Bollinger Band. Well, you hit your 10-point trigger long ago and you're out of the trade and you got 10 points. Well, there's been another 50 points of potential profit that have developed since then. I'm not here to tell you that we ought to be trying to get every point of profit that the market offers us. I don't want to do that. I want to use my trading plan to decide what my profit target is, and then I want to use my capital as wisely as possible to hit that target. And I said this on a Q&A a couple weeks ago, and I got quite a bit of feedback about it, so I'm going to say it again here. I actually want to be active in the market as little as possible. I want my capital to be at risk for the shortest amount of time possible. So if I got into a trade on an A method entry, and I got out for 10 points because it hit my 10-point trailing stop trigger, and then I see a B method or a C method or a super cycle entry present itself, there's no reason that you couldn't take that trade as your version of a continuation trade and pick up a few more points of profit potentially. But I want to be in the market for the shortest amount of time possible, take my profit, and then step back and wait and reassess the market analytics and decide when is the next best time for me to get into the market. So I'm not going to give you a whole bunch of numbers here because the only numbers that really matter are what you're able to produce yourself. Just as a point of reference, as Erin's been trading the A method, she's averaging 21, just over 21 points a day. Today was 25.5 points. All of that trading is between 9:30 and noon. And you can produce that on a regular basis. Now we've had days where we've lost, had losing days, but the biggest losing day is 5.5 points. So that's pretty manageable. And so that 21-point average is incorporating the losing day into that.
Mark, we have a good question here. Marquette's asking, is just the fact that the blue is below the other two, is that good enough, or does it have to make a fresh cross down or up to become a good setup? So if you actually want to go back to yesterday on NQ, making you jump through hoops here, huh?
You are. Want to go back to yesterday?
Yes.
Okay.
So I talked about the C entry and we talked about the supercycle entry. But what you should really see is that we went to a series of green AOs, but the trend bias never really crossed up there when we had the green AOs. The medium stayed below that red line the entire time.
Yeah, you never had a cross back to the upside on the medium.
Never had a cross. And I want to say, hindsight, I think that red AO changed mid-bar. So, because I traded this. So my first trade wasn't until that red AO at 3 more bars over to the right. We never fully crossed back up on the trend bias, but we went to a series of green AOs and then had a red AO. So that is an A entry. And that is my first entry of the day because it's the first A entry after 9:30. And you can see what happened. Nice follow through on that move. Went from, what was it, 39? It hits about 10 points right in that first bar, but all went down to 12. So profit potential there. And again, it doesn't have to cross back up. You're just looking for something to break, which is what the AO did by printing those series of green AOs. And then once the red AO came back on, there was that short opportunity.
Great example there, Aaron. Thank you. Now, just one thing real quick here before we jump to questions. This works just as well on stocks. I've really become quite a fan of Amazon using these signals. It's the exact same set of signals. You can use it on a 3-minute or 5-minute chart, or like I said before, you can use it on a 30-minute chart, but just adjust your trend bias to medium and slow. But Amazon as a stock, if you want to be an options trader, presents some pretty significant opportunities, and it's all the same types of signals. If I go back to yesterday, maybe I'm already at yesterday. Yes, here we go. Just visually, I mean, look at where the market opened and where Amazon went yesterday. Do we have a signal? Well, we ended up with an A signal sometime around 10 o'clock. Actually, I think it was 10. Yeah, it was 10 o'clock straight up. Now, we missed the first part of that move, but by now, the trend bias is saying we've got some full strength of confirmation. And if you look at the lower indicators, we also qualified that as a super cycle. So at 10 o'clock, there was a super cycle on Amazon, and it went from 1751.83 all the way up to a high of 1762.02. Let's just say 11 points. It went up about 11 points. And if you're trading a 50 delta option, buying to open a call with a 50 delta, that right there is a $5.50 profit. So depending on how many contracts you're trading, if you're trading one contract, that's $550 of profit. That's a super cycle. And the super cycles and methods A, B, and C all work just as effectively on stocks. And it's really important that you become familiar with the stock, you know, get an understanding of the stock and how it moves and how it performs. What I know about Amazon is that it offers really nice opportunity, nice movements, just like an index does. When we had that rather unexpected sell-off today that we saw in NQ, it hit Amazon also. You had A entry, A entry to go short here at 1248. You're in at 1753.19. It actually went down all the way down to 1734.32. So about 19 points of movement down. 50 delta, even a 40 delta is going to give you 8 points of profit or so. So I just wanted to share that because we've been so focused on futures recently, but the name of our company is Options Moneymaker. We have a lot of people in our community who love to trade options. These signals work just as effectively on options as they do futures. All right, let's address some questions.
Christian is asking, what exit method are you using with the 10-point trailing stop? What if you're up 8 points and it starts going against you? Do you try to lock in anything, 2 ticks, 5 ticks, etc., or just use the signals or stop until you get out?
So that is such a great question. And Christian, what that question goes to is your trading plan. Let's just say you're someone who is, you know, you have a goal of making 15 points. That's your minimum goal for the day. You want 15 points. You'd prefer 30, but you want a minimum of 15. If you take your first trade and it hits your trailing stop trigger and you're out for 10 points, and you're in your second trade and it's gotten up to 7 or 8 points profit and just seems to stall and you're sitting there waiting, you know that your minimum goal is 15. I would absolutely be locking in 5 points, because then I know that I could quit for the day after those 2 trades and I met my minimum goal. But if it does continue to move, you've locked in 5, and if it continues to move and hits your 10-point trailing stop trigger, you're out for another 10 points. You've got 20 points profit for the day. So I really think it's just important to tie that back to the trading plan and know what your objective is.
I'm looking at questions here.
Yeah, Bruce had a question out here that relates to something that I want to share. Starting tomorrow, this is the chart on NQ and RTY that's going to be shown to our trading community in the live trading room. We're also updating and adjusting the performance tracking spreadsheet, and we're going to start recording the A, B, and C and supercycle entries from 9:30 to noon. We're going to record all of those entries as they present themselves. Aaron and Michael will be calling them out. They may not personally be taking each of those trades, but we're going to identify them for you, and we're going to record what the market analytics chart shows, what the profit flow analytics chart offers us in the way of a trade, whether it's a win or a loss, so that we give you more information to be able to evaluate which method of entry you'd prefer for your own trading. So that's an evolving process that we're in right now.
BG is asking, how much are the indicators?
So the profit flow analytics chart set that you see is $295 a month. There's been no increase in price with the additional indicators. New cycle trading and analytics typically markets for $595 a month, but we have a really great relationship. I mean, we've really collaborated closely together in the creation of this. So we offer this to the Options Moneymaker community for $295 a month. And that includes all of the signals that you see on here.
Jerry's asking for the A entry, does the blue line have to cross both the red and the green on both charts?
One or both. It does not have to cross both. So right now, Jerry, the medium indicator is showing, let me go back to real time here. The medium, well, the medium indicator was showing blue in the middle. That's a qualified cross. It's not showing it now. It does not have to have crossed both. Now, Fergal's asking, am I correct in saying there are more entries in method C? There's about an equal number of entries in each of the three methods. That's been our experience. Bruce, we always have, you should know this by now, you've been with us long enough, we always have back-tested results, and then we have real-time testing that we do before we ever release.
Mark Jack just asking any timetable on indicators for NinjaTrader or Thinkorswim.
No, not yet. We have some thoughts. I'm working on an approach that we may offer an opportunity for some of you to get involved in, but we're taking a look at charting platforms and where we want to build this full set of indicators. So we've actually had an invitation from one group because they're familiar now with what we're doing here, and they would like to build it on their platform. So more about that in the near future. David's asking if you're only using one trend bias with less than 10-minute time frame, would you use medium or fast? I wouldn't use only one. It's simple as that. The integrity of signals is really reliant on the combination of the fast and the medium. So that's not a question I would answer, David, because it's not the approach that we've taken.
And I'm guessing here, but I know we've already had some people ask those with pro accounts on TradingView. You can have up to 5 indicators on your chart at a time. You get 10 indicators with Pro Plus. So those of you, you can upgrade obviously and get Pro Plus and have that many indicators. If you do not want to upgrade but still want to have all of the indicators on your chart at the same time, which right now we're showing, 6 indicators, the 2 trend bias, the cycle finder, oscillator, trend consensus, and the AO. You can have 1 or 2 or 3 on a different chart. So what that means is you could have a different tab, a whole new chart open, where all you have are the 2 trend bias and the AO. And then you could have another chart open where all you have is the cycle finder, the oscillator, the trend consensus, and the AO. Both of those charts you could have even side by side. They're just different tabs on your web browser. You could have your web browser just side by side, so you're still seeing all of the indicators, and it's just a workaround if you are reluctant to upgrade to Pro Plus.
David's asking Mark about your Amazon. Are you using a 3-minute chart for the Amazon?
I actually work with both a 3 and a 5-minute chart on Amazon. 3-minute is optimum, we've found, for futures. It works very well on stock options also, but I'll kind of move back and forth between a 3 and a 5-minute chart for the Amazon entries. I wanted to compliment Greg here. Greg pointed out that it looked like the 1927 bar also looked like a super cycle. Now, if you're talking about NQ here, you're absolutely right, Greg. 1927 this evening was a super cycle. We had a red AO. Both of the trend biases are nicely crossed down. In fact, not required, but you can see that both the fast and medium are both crossed below the other 2 lines. We've got a red oscillator, and we've got a red trend consensus and a red AO. And let's just see what happened there. 82.65.25 and so far it's gone down to 82.43. So there's a 22-point move here just since that entry at 9:27. It's a good call. Good call there, Greg.
Ed's asking, is e-signal data required? No, it's not, Ed. And I think you said one time that CQG data will work. It will work, but you can use that also to drive that. So to drive TradingView, yes, if you have a CQG account.
Yeah, Barkat, that is absolutely correct. I'm going to just say this again. I think we've covered it, but if this blue crosses above the red but is still below the green, that qualifies as a cross. If this blue crosses above the red but is still below the green, that qualifies as a cross upside.
Mark, Ed's asking, what do you consider a full cycle is on the 3-minute chart?
So I think that's coming from when I said that maybe at 9:30 we don't jump right in. What I mean by that, Ed, is let's say that there's a signal to go long at 9:30, but I can look back and see that that AO started printing maybe at 9:20, and the cross to the upside on the trend bias was at 9:20, and so that means to me that that cycle started before 9:30. So typically when Aaron and Michael are going to be calling out these trades in the live trading room, they're not going to generally be calling out trades where the original entry signal printed before 9:30.
Mark, can you do me a favor? Can you
Again?
yes, it's just to help visually because we've gotten the question a couple times. Can you scroll your chart to the right until you get right about to the 15, I'm going to guess 1542. Keep going. 1542 all the way next to your scale on the right hand side. Yeah, that time frame, but all the way next to the scale.
Oh, you want me to move it all the way over?
Yeah. Right. A little
Okay.
bit more. A little bit more. There you go. Stop. So that is a valid cross. You can see the numbers on the scale on the right hand side. Obviously the top one's a cross. There's no question, right? It's above both the
Both.
other line, but the medium, that's a cross because it is above. It's in the middle of the two others. So it has crossed now above that red, and that is your long entry with the green AO and the two crosses. So they both don't have to be above both. It doesn't have to be above both lines, but that is a valid A entry right there. It's also a B entry, but it's a valid A entry.
Michael's asking about an exit. Are we just using the AO to AO? Do we wait till it prints, then exit? If you could go deeper in that.
Yeah, so exit is really a more individual trader thing. What we're using right now is a 10-point trailing stop trigger. However, we will typically be using 20-point trailing stop trigger for maybe the first trade of the day, just because we know that sometimes there's a more rapid and abrupt move. But throughout the day, 9:30 to noon, 10-point trailing stop trigger, so that's 40 ticks on NQ, and a 6.5-point protective stop. That's what we're using. If you're in a trade and you don't lock in any profit prior to it hitting your 10-point trigger, and you get an AO that reverses, you should flatten the trade. You should take the trade off. The last time you ought to be holding that trade is when the AO reverses. So if you're not out of the trade by then, you ought to be out then when the AO reverses, regardless of whether it's for profit or loss.
Bruce is asking, did you say you may be working with a different charting service and leaving TradingView? We don't plan to leave TradingView. No, we're not leaving TradingView. What we're looking to is to expand to other charting services. But no, there is not a plan to leave TradingView.
It's our goal to have tremendous flexibility. And so if you're very familiar with and you like using Thinkorswim charts, or you like using Sierra charts at Infinity, or any of the other charts, well-known charting services out there, we'd like to have our set of indicators available to you on whatever chart service is available. That'll take us a little time to do, but it takes an investment of time, takes some investment in funding. So we'll keep you updated on that. I think we already answered this, but Michael is just asking, will we be tracking results according to the different entries? The answer is yes. We're going to show the A entries, B entries, C entries, and super cycles.
Peter's asking if the trend bias, both of them, is below the red and green lines, then no long trades, even if the AO turns green. Yes and no. So that is correct if you're only trading A entries. But otherwise, if you have a B or a C entry, which is possible, then as long as the AO is green, you would take a long entry. I don't know if we have an example right there. You do?
Well, here's a C entry right here to go long. Both of the trend biases are below, but you have a C entry to go long. AO is green, and you've got two blue bars back to back. And that happens to be a trade that you're in at 65.5. It went up to a high of 76.25 before it reversed. So the B and C method of entries are not dependent on trend bias. But if you want to wait or only follow the direction of the trend bias, there's nothing wrong with that at all. The whole reason we created the trend bias was to have a way to more clearly see what's the likelihood that it's going to continue moving in that direction or move in a different direction.
Jerry's asking, what expirations are you typically using on your Amazon options with a 3-minute entry?
Typically with Amazon, and this will vary by stock, Jerry, but typically with Amazon, Amazon only has an expiration at the end of each week. So for me personally, trading Amazon, I'll trade this week's Friday expiration through about Thursday at noon, and then I shift to the next week.
BG's asking, does the fact that the AO is below the zero line mean anything if the trend bias did not cross up like yesterday? I am not looking at where the AO is in relation to the AO zero line. I am simply looking at if the AO is green or red for my trade entries. Joe, let's see. You don't show the same data window. What do you mean by that? Do you have the data window open? It's the third from the top on the right.
Is that the way it looks, Joe? Well, you don't have a data window. Third from the top on the right. If you click that, it should open a data window for you.
And if your 3 trend bias lines in, I'm assuming you're on the scale is what you're referencing, you need to right click on the chart, or there would work too, I believe.
What are we looking for?
I think it's under labels. No overlapping labels needs to be checked at the bottom there. That's so that they won't hide each other. They'll all be separate.
I want to share this from David. David was one of our early adopters of kind of the preview of the methods, the new methods, and he only traded method B. Now that's where a cycle finder prints followed by an oscillator. So he ended up for the week $883.92. 8 trades, missed 2, and then he locked in 5 points on some that ended up going to 10 points. He only traded 1 trade on Friday and left for the day, but took 5 points. So David's a great example of it was early, it was kind of an early adoption. He was getting used to it. But I think based on what he's saying, that he had some great success with it, and is looking forward to the next few days. Mario is asking, how do you guard against midday or early day choppiness where trend lines are going back and forth? Well, that's why we have 3 different methods of entry. I think what you're going to find, Mario, is that this approach, the trend bias, a combination of the fast and medium, first of all, you're not going to get that same level of choppiness with both the fast and the medium. And you need alignment between both in order to take a trade. That's one way to eliminate some of that choppiness. And the other methods, the B and C and supercycle methods, are not prone to that same level of choppiness because there's a slightly refined and more well-defined set of rules as to when you take those trades. You will still experience periods of choppiness, but I think what you're going to find, Mario, compared to where you've been before, is that this set of rules keeps you out of most of that choppiness. And when you are in that choppiness, you'll get a pretty quick reversal on the AO to take you out of the trade for small loss, maybe a small gain, and then just wait for your next entry. Barkat's asking if we're still using fractals. I just have my fractals suppressed right now, Barkat. I put them back on. They're hidden, but just to kind of make the chart a little cleaner for this training, I have them suppressed, but I can put them back on at any time. Just like my Bollinger Bands, I'll put them back on whenever I want to just do a quick reference as to where we are relative to the Bollinger Bands, but otherwise keep them suppressed.
And fractals can be used if you're not using the trailing stop parameters and instead you're holding into a reversal. If you start trending in one direction, you could always use fractals to adjust your stop to that level to lock in profit. Mark, how many trades were there today using method A? Yeah.
There were 5 trades today for 25.5 points. That was just method A. Now, A, B, and C today was actually 14.5 points. So method A was really the clear winner today. That's not always the case, but here's the other thing. You don't have to always have the top performing method. If you get really comfortable and confident with one particular method, David was just talking about the B method. If you want to trade the A method like Aaron does, or you want to wait for super cycles, whatever it is, as long as you are crystal clear on what your trading plan is telling you that you need to perform, how you need to perform each day in order to meet your goal, that's all that matters. If you took 1 trade a day and you waited 2 hours in the morning for that setup, and that trade gave you 10 points, and your goal is 5 points a day, that's all that matters. You don't have to spend any amount of time or energy or emotions on, oh my God, that one moved 50 points. I missed out on it. Wow, I missed the trade right at the beginning of the day. None of that needs to be part of your equation of trading. If you know very clear what your goal is from your trading plan, 5 points, 12 and a half points, whatever it is, you can adjust your exits to meet your trading plan. You can adjust your entries to meet your trading plan. If you know with confidence, because you spent some time working on this, if you know with confidence that you could produce enough from just A method entries to hit your trading plan, then just take A method entries. What we're giving you is a highly flexible tool to achieve your personal goals. If your goal is 20 points and the first trade of the day gets you 10 points and you got to wait an hour and a half for another trade, and it starts stalling out and you can lock in 5 points, you got 15. You only need one more trade or maybe 2 trades where you scalp 2 or 3 points on the next 2 trades. That's the way you adjust to your trading plan. That's how you use a solid, confirmed, rules-based entry method, and that's how you adjust your exit so that you are achieving your trading goal.
Burkhead is asking, for B entries, the oscillator does not have to print, just flash. You want to have the oscillator come on red or come on blue. It wants to start that color. Generally, you're not looking to enter mid-bar. You're looking for the bar to start with an entry. And then Pamela's asking, if the trend bias finally crosses, but you have a lot of green bars, do you go on the next green bar, or do you wait for another group of green bars? So you are looking for the alignment to happen at any point. Generally, what will happen is the AO will either start first, and then you're waiting for the trend bias, both of them to cross. One might cross first, and then the other might come along. Once they are both crossed at the beginning of a bar, you're entering. The other can happen, the opposite way can happen. You can have trend bias cross first, and then what you're waiting for is the AO to come in the right color. And as soon as a bar starts with the correct color AO, that's when you're entering the trade.
Here's a great example right here, Aaron. At 1848, both trend biases were crossed down, but on a green AO. The prior bar at 1845, both trend biases were not crossed down. Actually, back up one more. They were not crossed down at 1842. So we're waiting. Then at 1848, we see both trend biases are crossed down, but we still have a green AO. So we know that we're watching our countdown clock over here. And when we see the countdown clock coming close to the end of that current bar, the minute we see, because we already know the trend biases are down, the minute we see the red AO come on at the top of the next bar, we're short.
And just like the opposite is true right now, we have a series of green AOs, but trend bias is not crossed up at all. And it might on the next bar see the fast cross up, but we might not have the medium cross up yet, and that might happen a couple bars later. But at the point where at the open of the bar we have a green AO and both trend bias fast and trend bias medium are both crossed up, then that is the entry.
Michael says, do I wait for AO to print or exit as soon as the AO points the other way? As soon as that flashes on at the top of the new bar, and it's an opposite, it's a reversal, take the trade off. Different Michael says, if you're using the super cycle for stock options, what would you anticipate the holding period to be? That is all dependent on what time frame you're using. If you're using a 30-minute or higher chart, maybe all the way up to a daily, you might actually be holding your options for a few days. Depends on how responsive that time frame is. If you're trading a 3 or 5 minute chart, you're likely going to be out of that trade that same day. It's going to be a day trade for you. Yes, Michael. Anything with a trend bias, you want both to agree. You want both the fast and medium to align in the same direction. Bruce, New Cycle Trading is a group of traders and some actually pretty smart programmers who've been around for a while, but we got to know them and we worked with them, and we've kind of given them a bigger audience than they ever had before with the Options Moneymaker community, and it's just something that is a win-win for everybody. Our community of clients are winning from the opportunity to use these signals. We just love being able to bring this to you, and it's given them an opportunity at New Cycle Trading to invest more time in developing this full comprehensive set of signals. Peter, the answer to that is yes. Peter's asking, does the trend consensus only factor into the super cycle? Yes, that is true. Mario's just asking a little more information about stops and profit exits. That's a little more difficult, Mario, to give you one finite definition. The reason is because we're in a period of relatively mild volatility, and 10-point trailing stop trigger is working really well for trades that are entered on a 3 or 5 minute chart. 1 minute chart is going to have typically more reversals within those bigger cycles. If I was trading a 1 minute chart, I'd be trading a 3.5 to 5.5 point trailing stop trigger. On all of those, though, I find that a 6.5 point stop is typically reasonable. A lot of our research shows that if it hits 6.5, it's typically going to go higher. I know we all have the story of that one that hit 6 3/4 and then it reversed and ran nice and profitable. But those are more rare than they are common. And with these multiple methods of entry, you've got an opportunity to get right back in. Joe's asking, the summary of his question is, are there any thoughts on how to be more effective on the options side of trading? So it's a reality that it's a single click to get into a futures trade. If you want to take that same signal as an options trade, it's a little bit more of a negotiation with the market, because you've got the difference between the bid and the ask, you've got the midpoint. We're trying to place a trade based on the midpoint or the mark, and if it doesn't get filled, then we've got to modify it. Right? That's just a reality of options trading. But I like the options because if I have enough time to expiration, the same signal that I might take a futures trade on, I can take as an options trade. There's not the same amount of immediacy in terms of follow through and needing to have that trade move favorably. If I have an options trade that has a week to expiration and the market's just stagnant and flat, well, I might hold that options trade overnight. I certainly can't do that on a futures trade. So there are definitely, and it's not just limited to what I just said, there are definitely pros and cons on both sides. I personally like trading both futures and options, and they both offer some really great opportunity.
Lou's asking, do you recommend different stops during after hours trading? I would generally be looking for smaller profit targets, and just evaluating what the market is doing and basing where to put my stop on that, just because sometimes it can move. What did it move here? Like the 20 points as we were talking or something? But
It's had a pretty healthy outside of regular market hours move tonight.
but other times it can, I mean, you could be grateful to get 2 to 3 points. So I think it would be based on what the after hour market is doing. Just similar to once we have high volatility, we'll reevaluate stops and triggers and.
Mario, I hope you're not really serious about that. Mario wants to know if we have any plans to have the live trading room open for overnight trading.
And Michael had to leave, so he's not even here to defend himself about asking if maybe Michael will be on the microphone at 4 to 5 a.m.
Because if Michael was here, he would say, well, yes, we are going to open it, but Aaron's going to have the 4 to 5 a.m. shift.
We go through this. Nobody wants me at that time.
Yeah, that's true. Burkett, I can't speak directly to these same signals working on oil, bonds, and euro, but the signal is the signal. The signal is an indicator of what the opportunity is, no matter what you're trading. I've not traded oil extensively or bonds extensively, and not traded the euro at all. So I'd rather not speak to that. But what you can do is you could trade them in sim mode and get really comfortable. And maybe one of the methods works better on those than one of the other methods. So that's something you've got to get a little more familiar with. And I just want to say thank you very much, Barkat. Just saying, wanted to take a moment and appreciate all three of you for your efforts put into this, for all the teachings. We appreciate that. Aaron, any other thoughts?
No, I'm excited to bring this to the live trading room tomorrow.
Okay. Well, I really appreciate everybody being here. Appreciate you being part of the Option Moneymaker community, and on behalf of New Cycle Trading, part of their community of traders. We've collectively just collaborated together to bring something that we think is very, very strong indication of what direction we're going to go here. And you can take advantage of it to trade it, trade options, trade futures, and use your trading plan to know what your goal is and meet your goal. That's our goal. All right, Aaron, thanks for being here. Thank you, everyone. Really appreciate you guys being here.